Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to the new week and 1 week before Christmas. Well, the Australian dollar plummeted on Friday after a batch of weaker than expected economic data out of China and Europe and sparked fresh worries about the state of the world's second biggest economy and prospects of a global growth. Fresh evidence that global trade tensions are hitting the world's second biggest economy, which emerged on Friday after China released its data and showed that industrial output missed its 5.9% forecast and came in at 5.4%, while retail sales for November missed the economist's forecast of 8.8% and printed an 8.1% decline. The Australian pair finished the week at 71.70 and finally crushed the support level of 71.90, which was seen as the 60-day moving average. With the close beneath there has reinstated the downside, and I am looking for a confirmation now of further weakness into today once we get a challenge of 71.35. And this would confirm that the market is actually found very much a negative tone and also sentiment and could push the target back towards 70.20.35. Any advances on the day sees resistance at 71.95. Well, the euro also plummeted on Friday, as I mentioned, due to the fact that the dollar index has posted a 52-week high of 97.71 on Friday, rising nearly 0.40%. This in turn fueled the bearish move and sets up the challenge now to 112.60 this week for the euro, and I do expect to see further weakness towards 111.60.80 if the dollar index continues its path and reaches the 98 objective, because beyond there could see an extension up towards 99 to maybe 101. This would put the euro clearly in the path of 111.60 or maybe touch lower towards the 110 region. Any rally should find resistance intraday at 113.65. Over the last 4 to 5 trading days, the dollar yen has failed to stage any significant moves. However, I do expect to see a little bit more momentum into this week. One, for the US dollar has picked up, and two, the market is now waiting for the Federal Reserve rate decision, which is scheduled for the 20th of December. It is likely that the Fed will move 25 basis points, but may actually show a slightly dovish statement. This could give a little bit of a mixed view on terms of the fact that the dollar index could take a bit of a stumble, as the objective for this year still remains at 98, could retreat from there. I'm taking profit towards 114.20 and reassess as we could see a pullback to the region of 112, but not quite at the moment, while it stages a mild uptick this morning. So initially up to 113.75 to 114.20 should be achieved. The pound still relatively bearish, and as you can see from this descending triangle, it's falling closer to its objective, seen at 124 or maybe down to 122 as a measured move. As long as we maintain to keep hold of beneath 127.20.50, then I am bearish. Last week, Prime Minister Theresa May did survive an internal non-conference motion in the Conservative Party. However, the 1/3 of the Conservatives MPs voted against May, leaving the Prime Minister in a weak position. Along with this, on the weekend, Tony Blair, the ex-Prime Minister, clashes with Theresa May after she slammed him on Sunday after he called for a second referendum. She said his call was an insult in the office he once held and the people he once served. Mr. Blair hit back and said he was speaking in the national interest and the interests of democracy. Far from being an anti-democrat, it would be the opposite, as indeed many senior figures in her party from past and present have been saying, he said, accordingly to the Press Association. Nevertheless, the pound is not out of the woods, so I do expect to see further weakness, with the immediate target seen at 125.45 as minor, and then towards 124.80, and lower towards 123.55 to 70. As I mentioned, resistance seen above 126.55, 60, and crucial, as long as it's intact, I keep the bear view at 127.20.50. The market plummeted on Friday for gold and actually now can test the lower side of the range, which is seen around 12.31 to 36. As long as we don't break beneath 31, then I'm happy to say that the market can stage a recovery. But it seems that the market's getting a little bit jittery in terms of how the Fed will play out this week, in terms of will they go 25 and will the statement be dovish or hawkish. I do anticipate that the statement will be dovish after some comments made from certain members in the US, in the White House. Therefore, we could see a rebound from 31 back up towards the top side of 41 to 50. And wrapping up with oil, well, the market is still holding to its recent move, even though we did drop back slightly on Friday and losing roughly 2.5%, about $1.38. As long as we don't take out the level of 49.80, I am still bullish, and I still expect to see further upside tests towards the region of 55 as an objective, but the immediate target around 52.5 to 54. But if we do break beneath 49.80, then this would give further concerns to the downside and may bring in a target of $45 a barrel. That's where I'll keep my stop, beneath 49.80. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day and a great start to the new week.